Hey, what's up everyone? My name is Rohit and today I'm going to be making a video on how I track my personal finances. So the reason I've actually made this video is because I've had a number of friends, family members and colleagues actually reach out to me and ask me how I manage my finances, how I track my cash flow and all of that information. And I thought instead of talking to each person individually and doing this with them, I thought it might make more sense to make a big video, post it on YouTube and hopefully help some people out. So this is a really important thing to get right. No matter who you are, whether you are a high-level CEO or you are just starting to work, knowing how your cash is actually flowing is so crucial to setting yourself up for financial freedom and financial success. Now, I also know there are tons of people all over the internet talking about how to get paid $10,000 a month and how to become a millionaire overnight, and with lots of different things. There are lots of gurus out there. I'm not a guru. I'm not trying to be one. I'm just trying to share what I do, what's worked for me. And I've had a lot of people request me to kind of show them what I do. So that's why I'm making this video. So I think it's important as well to establish some level of credibility or trust here. So I'm just going to tell you a little bit about my background so that you maybe feel a little bit more okay with listening to what I'm talking about in terms of finance. So my background, I have a bachelor's degree in economics. I have a master's degree in finance. I've worked in financial advisory. I also am currently working in fintech. So I have some degree of financial understanding. Again, I'm not some expert here. So this is not like super hard financial advice that you have to, live and die by. This is just really what I do, and it's up to you to follow it and make it your own and kind of just play around with the templates I'm going to share here and really build something which is going to help you achieve whatever your financial goals are. Again, you don't have to follow this blindly. It's entirely up to you. I'm just giving you, a bit of a snapshot of what I do, and hopefully it helps you out. Now, I'm going to stop rambling here because I don't want to waste your time, because I hate videos which are too long. So I really don't want this to be one of those super long videos. So 3, 2, 1, and I'm going to snap into a quick loop video. Hey guys, I'm still here. I'm just in this circle now so that it's a little bit easier for me to share my screen. I'm also going to be putting on my old man glasses, so don't judge me too hard. I'm going to shrink my frame now, and I'm just going to move myself to this bottom corner over here. So I'm still here. Don't worry, I'm not leaving you. All right, cool. So now we are actually in my spreadsheet here, and I'm going to walk you through what I do so that I can track all my expenses and my revenue, my investments, profitability, everything of the sort, and really manage my cash flow quite well. So the first thing you want to do is you want to open up a Google Sheet. Open up a blank sheet and make it kind of look like this. Now, I use Google Sheets personally because I like it. It's easy to use. I come from a background of using spreadsheets, so it's very simple. And you can customize a spreadsheet to look however you want it to, which is terrific. Now, there are also a ton of cool apps on the market right now. You can feel free to use those. I personally am not the biggest fan just because I like to customize it. I like to make it fit my expenses in the way that I track my money. But again, feel free to do whatever floats your boat. Now, what you want to do is after you've created a blank Google Sheet, you basically want to create 4 tabs. You want to create expenses, revenue, investments, and profitability. So these are the 4 reports that we're going to be monitoring and working on so that we can manage our cash flow. So the first one I'm going to take you guys through is expenses. Now, what you want to do here in this expense tab is you want to create 3 distinct categories: fixed expenses, variable expenses, and additional expenses. Now, fixed expenses are those types of expenses that are going to happen every single month. They're reoccurring expenses. No matter what happens, you have to pay it. There's no variability to it. They are fixed. So an example could be something like rent, insurance, car payments, phone bill, and you get the idea. Now, what you want to do from here is you want to put in the amount. So for simplicity's sake, we're just going to put in 100 everywhere. You want to put in the billing period. So this is the actual period in which the expense is happening. So for me, for example, for rent, I would say first of the month to the last of the month. Whatever floats your boat. You can put in, 1st of Jan to 31st Jan, whatever you feel like. Again, the billing frequency will depend very much on the billing period. So if your rent is happening once a month, you would just put in monthly, which I think is the case for most people. I have all these additional features here, but you really would just need to say monthly. There's not really too much that you would want to do over here. And then total per month would just be the same as what you put in the amount, right? There's no change there. Now, I have this category called source country. This is really useful if you live in multiple places and you have expenses from multiple areas, right? So for me, I live in the United States, but I also have expenses coming out from Australia, which is where I'm from. So for example, I would put USA for my rent, but let's say my phone bill is getting paid out of Australia. It wouldn't actually be, but just for example's sake. So that is essentially what your fixed expenses would look like. These are expenses that are happening every single month. There's no change to them. They happen no matter what happens, no matter how much money you earn, no matter what you're doing, you have to pay these expenses. So that's your fixed expenses. The next category I'm going to take you through is variable expenses. So these are things which you know that you're going to be paying for in the month, but you don't actually know the exact figure. So I'll give you a great example of this. Let's say groceries. Now, if you're in a fitness, let's say you're in a bulking period or something like that, your grocery bill is going to be really high. Or let's say you're trying to lose some weight, your grocery bill might be a bit lower, might even be higher if you're trying to eat healthier foods, who knows. But groceries are something which has a lot of variability. Another example of a variable cost could be something like parking. So if you are working from home a lot, your parking fees might be lower, but then the next month, let's say you're going to the office 3-4 times a week, parking fees might go up. So that's something which has variability to it. So the other thing that I would also put in here, which I think a lot of people tend to forget, is things like eating out, Uber Eats or any sort of food delivery, shopping. You get the gist. Now, from here, same thing as before. Let's put in the month. So for example, let's put January. Let's put in the amount. So what I would do here is I would actually add the total for every transaction you're doing. So let's say in a given month, in week 1, I spend $100 in groceries. Then in week 2 of the month, I spend $250, then $300, then $50, something like that. And that's my total grocery expenses. Same thing with parking. Let's say one day I spend $5, one day I spend $15, another day I spend $25, one day I spend $4, and that would be my parking. And then the same is true for eating out, Uber Eats. You'd basically want to tally all these expenses into these categories. Again, billing period, billing frequency is pretty much the same as what we've said above. So I would say for this one, you would put 01 Jan to 31 Jan, like that. And then billing frequency, I would say ad hoc, because you're basically adding these expenses in as they come into your account. Total per month, again, just copy paste that. Again, you don't really need this. I just have it there for simplicity. And then source country, we already spoke about before. One other category that I like to put in here, which I'm just going to put another row in, is investments. Now, I'm going to talk about this in a bit more detail later on, but in my mind, because investments are cash which is actually coming out of your bank account, even though it's going into an asset, I would still kind of categorize it as a type of expense. But again, I'm going to go into this in a lot more detail when I get to the investments tab over here. All right, next thing I'm going to go into is additional expenses. These are one-off expenses that you didn't know would occur in the month, right? So I'll give you an example. Let's say it's your sister's birthday and you have to buy her a birthday gift. So you can put in sister's birthday, and you can put in, let's say you give her a $200 gift, and source country, again, put in USA. Another random expense is, let's say you're going on holiday and you need to take flights, and let's say the flights are from here to Bali, something like that. So you can put in flights for holiday, and you can put in, I don't know, $700. Good price for a Bali flight, I think. Something like that. And essentially what you'd want to do is you wanted to add up all of these, and then you would total that at the bottom over here, which would equal the total of this and this. The same is true for all the other categories I've shown you. So you want to basically make sure you're totaling everything so that you know how much is being spent. So again, very simple, just use the sum command in Excel, not Excel, in Google Sheets, and you can basically put all of this together. All right, so now we have just gone through the expense tab. This is probably the most complex part of the entire sheet. The rest of it is pretty simple from here on out. So now I'm going to go into the revenue tab. Now this is pretty simple. I have really just two categories that I put in: recurring revenue and added revenue. So let's go with recurring revenue first. An example of recurring revenue is kind of similar to the fixed expenses that we spoke about before. This is revenue that you can bank on coming into your bank account every single month. So an example could be like your job salary. Let's say you get paid an amazing $10,000 a month. Again, billing period, billing frequency, total per month, all of that, it's exactly the same as what we put in the expenses. But say job salary is that $10,000. Now let's add another recurring revenue. Let's say, for example, that you have an investment property which is giving you a rental income. So let's say rental income, whoops, I forgot how to spell for a second. Let's say rental income, and let's say that's giving you, I don't know, $5,000 a month. You are a rich person because you're making all this money, which is fantastic. But you get the point. Basically, I'm just trying to say, in the recurring revenue, this is revenue which is going to be happening every single month. Just like your fixed expenses, this is your recurring revenue. This is money getting pulled into your bank account. The next part of this is the added revenue. Again, just like the variable expenses, I hope you're seeing the theme here. This is revenue which is kind of variable. It's not always consistent, but it does come into your account. So an example could be, let's say, commissions. Let's say you have a sales job and you get paid on commissions and you've had a fantastic month. Let's say you get paid $500 in commission. And let's say it's a weekly type of situation. So let's then put it in as similar to what we did in the variable cost, in an ad hoc sort of situation. So let's say you get $500 on sale 1, then you get $200 on sale 2, $300 on sale 3, you get the idea. Basically, you want to tally that all up. Another thing could be interest payments. Let's say you're getting interest from your bank account, and let's say you're making $20 a month from your bank account, and you're also getting interest from another savings account, which is giving you $40, and maybe you're getting interest from a trading account, which is giving you $5. That's basically what you'd want to do. Another thing I like to add in here that not everybody would, but I like to do this, is I like to put credit card cashback offers. So for example, on my credit card, I get cashback offers with a ton of different companies. The most common one that I get is from Instacart, which is a grocery app. So every time I spend on groceries, I actually get a bit of a cashback on that. And so I like to put that into my added revenue. So let's say I spend $200 on groceries and I get a 10% cashback. That would be $20. And then the next week I spend another $100. That's a $10 cashback. Again, this is entirely up to you. Make it whatever you want, but that's how I would add in the added revenue. And then just like before, we just total everything up. Simple as that. We do the same over here. And just like that, you have now done your revenue report. All right, guys, now we are on report number 3, which is the investments tab. So this is probably the easiest tab out of all of them to work through. Essentially, what you want to do here is you want to list your investments and then just put in the value at the beginning of the month and put in the value at the end of the month, and then just monitor that change to see if your wealth is actually increasing or decreasing. So, and I'll give you an example of different things you can put in here. So let's first start with, say, a portfolio. Let's say you're buying shares or something like that. Let's say you're using eToro or Robinhood or, I don't know, your banking app, something of the sort, whatever you are using. I'm not, connected to any, so feel free to use whichever one you like. But let's say you're using a portfolio app. I would put that in here. So let's say portfolio, and I would say your opening value, let's say it's $5. That's how much money was already in the account. The closing value at the end of the month, you put this in. Let's say it is $1,000, which is terrific. Now what you want to do is you also want to put in the contributions. So let's say in the month, I have put in $200 of my own hard-earned money into this portfolio. Now, the beauty over here is that you can actually measure how your portfolio has changed over the month. So on the Jan 1st, you put in this $5. On Jan 31, you put in $1,000, and you know that you contributed $200 at some point in the month. Okay, so now what you want to do at the end of the month, you want to have a look at how your portfolio has changed. So we can see that we started at $5, we finished at $1,000, and we've added $200 during the month. So the way we would do this is we would say the closing value minus the contributions and then minus the actual opening value. And you can see that from your portfolio, it's actually gone up by $795. This is just stupidly simple, but it's just a way to monitor how your investments are tracking. Let's say that you have some in crypto, right, as another investment, or let's say you have some in a IRA account or some sort of super retirement account, something like that. You can measure them the exact same way. Let's say you start off with $100, you end with $1,000, and let's say you've contributed $900 here. You'd basically just copy the formula from above and you'll be able to see how much. So you can see over here, if I started with $100, my portfolio went up to $1,000, but I contributed $900. I actually didn't make any money. It just stayed stagnant. All that happened is I added $900. You can do the same again. Let's do one last example with the IRA, which is a retirement account for those of you who are not in the US or don't know. In Australia, it's like a superannuation. And I don't really know what it is in other countries, but anyways, so for this, let's say your opening value was, say, $16,000. Nice big number there. And your closing value was $25,000. Whoops, $25,000. If it dropped to $25, that would be quite alarming. And let's say your contribution was $500. Again, we copy paste that formula from above, and you can see that your IRA / super / retirement fund, whatever you want to call it, has gone up by $8,500 in the month. And again, you just total it at the end. You can see the total change, the opening value versus the closing value, and then you can see how much money you have actually made. Now, what I like to do at the end of the month, I like to actually highlight this in green if it's positive, red if it's negative, and then I move on to the next month. Now, what you want to do here is at the end of every month, you want to copy paste this and then put it below here. So let's say this month was January. Oops, there we go. And let's say this month is Feb. Now, the cool thing here is you want to then change the opening value to be the closing value from the previous month. Just as so. Very simple, very easy. Just like that, we can do all of that. Now, we don't actually have the closing value at the beginning of the month, so I like to just put 0. And let's just say our contributions are all 0 at this point as well. And then as you get to the end of the month, just as we did before, you put in the closing values, you'd see the change and any contributions you put in here. So that is the bulk of the investment account. The last part of this investment account is the actual contributions, which I'm going to talk about. Now, if you remember, I had previously mentioned that the investment account and the expense account kind of have this link, which is the actual contribution, meaning the amount of money you have added into that investment. So let's go with this example of the portfolio up here. Let's say I've added $200 into my portfolio in the month. And I'm going to make a note of it. So I'm going to say on the 2nd of Jan, I bought 1 share of Apple for $200. Easy, right? Now what I'm going to do is I'm actually going to take these two cells and actually put them in my expense report. So let's go back to the expense report. Let's put in, we've got investments over here. Let's copy that cell. So we go here, take the contribution, and over here, we can add a notes tab or something of the sort. I have a notes tab in mine, which I love to use. And you would copy paste that. Just add notes up here. Easy as pie. And there we go. Not everybody would agree with this approach. I like to do this because I like to mentally think about the cash I have in my bank account. And although an investment is not really me buying Uber Eats or buying a watch or something of the sort, It's actually an asset. It's money that I have that is growing. It's still cash being taken out of my bank account. So mentally, I like to think of it as an expense. But then in the investment report, obviously, I look at it a bit differently. But that's kind of how I monitor my contributions to my portfolio or any other asset I have. Okay, guys, so now we've gone through the expense, we've gone through the revenue, we've gone through the investment, and we are now at the final tab, which is the profitability tab. And you guessed it, this is basically where we put everything together. Really simple, really easy. What you want to do is you really want to cross-check everything with your bank. So if you've ever had experience in financial advisory or auditing or anything like that, this is basically a bank reconciliation. So let's put in the month. Then let's put in our bank opening balance. So what I want you to do is to actually open up your bank app and actually just see how much money do you actually have in your account. So let's say it is, I don't know, $9,000, something like that, right? Now, one thing I should have mentioned at the beginning, which I totally forgot to, so I'm going to tell you now. This really works best if you are paying for all your expenses and everything using a credit card, debit card, or some sort of electronic payment method where you have the actual payment captured. It just makes the reconciliation process a lot easier because then you can just jump into your bank app and double check everything. Again, if you're using cash, that's fine. Just make sure you make a note of all your expenses so that you can double check everything and you're actually monitoring how much cash you have in your wallet or wherever you keep your cash. But yeah, my preference is if you have a credit card, get those credit card points and it makes it a lot easier. Anyways, back to the actual profitability report. So let's say your bank opening balance is $9,000. Let's say your bank closing balance is, I don't know, $1,000. I'm going to fix this up a bit later, but we're just putting in fun numbers for now. And then this is the easy part. You're basically just going to copy paste all those cells. So total fixed cost, we jump into the expense report and boom, just like that, it's there. Total variable cost, again, we jump into the expense report and boom, it's down there. Total additional expenses, again, exactly the same principle. There we go. And then we just total this up, which would be 1, 2, and 3. And there we have our total expenses for the entire month. Now we jump onto the revenue side. Let's go total recurring revenue. Again, exactly the same process. We jump in there. Total added revenue. We take this figure over here. And then total revenue, you guessed it, we just put the sum of the two. We finish this with book profitability. So this is, when I say book, this is basically according to our spreadsheet what the number should say. So this profitability basically means revenue minus costs equals profit, right? Basic economics. So all we do here is we take total revenue and then we minus that from total expenses. And just like that, we have our book profitability. So this is the profitability number that we are expecting. This is how much money we have added to our bank account. This is how much cash we have added to our bank account in that month. Now, with this book profitability number, I like to make it look a little bit better, so I change it to number. I don't like decimal places. Easy. So we added $13,846 to our bank account, which is terrific. But now we actually have to look at the actual amount in our bank account to make sure that we've got the right number. And this is what I was saying. This is the reconciliation process you want to do. So what I'm going to do is press equals to. I'm going to look at my bank closing balance and minus that from my bank opening balance, which is negative $8,000. Now, this is crazy, right? If we look at the variance, meaning the difference between the two, we have a difference of $21,846. That doesn't sound right. Now, just to clarify this, because I hope nobody's getting lost here, but when I say book profitability, this is the profitability you should have according to your spreadsheet, this spreadsheet that we're working on. And the bank/actual profitability, this is the profitability which you see in your actual bank account. So like I said, these blue tabs over here, this is the amount of money that you actually see in your bank tab. So let's say you're opening up your Wells Fargo app, or if you're in Australia, your ANZ app or something of the sort. This is the amount of money that you would put in at the beginning of the month, and this is the amount of money you see at the end of the month in your account. So we're comparing the amount in your bank account versus the amount in your spreadsheet. And you can see there is a difference here. So this basically will tell you to do one thing. Look at your expenses and figure out where that $8,000 went. Okay, so you can see the variance now of 21,846. Let's figure out why that is. So what I would do in this situation is I'd open up my bank app and figure out where is that 8,000 gone. I would cross-reference all my expenses with what I have over here. And let's say, for example, I'm doing this and I'm like, oh, I didn't realize I had this crazy night out where I went to this really fancy restaurant and I spent exactly 21,846 on food. Now what I would do is add that to my total as so, and when I jump back into my profitability report, I see my variance is equal to 0, which is what we want. We want to make sure that what we have in our spreadsheet and what we have in our bank account is the same number. That's how we can make sure we are monitoring our cash flow correctly. It's also called balancing or closing your books or whatever you want to call it. And then finally we have, is it profitable? Yes or no. Now in this case, minus 8,000 is not profitable, obviously. So we put a no. Now the beauty of this whole process is that it is an analytical tool for you to use. You want to use this spreadsheet to basically make sure that you're understanding how you're bringing in cash and how you're spending your cash, right? Because by doing that will give you the tools you need to get towards financial freedom and the financial goals you have for yourself. So in this situation, I can clearly look at my expenses and I can say, you know what? I'm paying way too much money for rent. I need to find a way to cut that down. I can look over here. I can say, oh my gosh, I spent so much money on Uber Eats. Why am I eating so much takeout? Let's maybe drop that in the next month. And then you can also look at these. You can say, oh, crazy night out. Maybe I should be careful of which restaurants I go to. There's a lot you can do. We can jump into the revenue and you can say, oh, you know what? My rental income is too low. I'm going to start actually increasing the rent that I'm getting paid so that I can increase that. Or I can say my job salary is too low. Hey, I need to talk to my boss and get a higher raise. There's a bunch of things you can do here. This is the analysis you want to do. And again, investments. You can have a look at this and you can figure out which investments are performing well and which are performing badly. And the ones that are performing badly, maybe reduce your contributions there. The ones that are performing well, increase your contributions there. Simple as that. And ultimately, you can look at all of this and this is going to tell you how your cash is being spent. And then it's also going to be a tool for you to use to actually plan your future expenses. So let's say if you want to buy a new house or you want to buy a new property or you want to invest a ton of money in a new startup or something of the sort, you now have the spreadsheet that you can use to actually make sure that you have enough cash in the bank ready to go, and that you're able to monitor the rate at which you're increasing cash or burning cash. And that's pretty much it. I hope you've enjoyed this. I'm going to jump back into the main screen in 3, 2, 1. All right, I am back. I'm going to remove the old man glasses now. But yeah, I hope you enjoyed this video. I hope it's given you some tools that you can use to improve your cash monitoring. And I really hope you achieve all the financial goals and financial success that you are after. So yeah, thanks for watching this video. I really appreciate it. Final disclaimer, again, this is not hard financial advice. This is not financial recommendations or anything. This is just what I personally do. And I hope that it inspires you to kind of create and cultivate your own financial tracking process that works best for you and allows you to reach your financial goals. But yeah, thank you so much for watching this video. If you liked it, obviously smash the like button. If you didn't like it, maybe comment. Don't smash the dislike button. I don't know if that exists, but don't do that because that's a little mean. But in the comments below, give me your feedback. I love it. It would be super helpful and I'll make it better for the next video. If there is a next video. And yeah, thank you so much. And I hope your day is as awesome as you are. And if you feel like still watching videos of me, I have another channel called The Earther, which I will link somewhere on this page. And there's a bunch of fun videos there of me talking about animals and nature and all that jazz. But yeah, thank you so much. Have a great day. Bye.